All right, good morning everybody. Hopefully everyone is doing well. Welcome to another live session here on Facebook. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. For anybody just tuning in for the first time, every single Thursday we go live here on Facebook where we talk about the stock advisory app, what's going on in the market, how to make money in the market, different tips and tricks, anything and everything related to trading, investing. We've got you covered. So if that's what you're looking for, you're in the right spot. Welcome once again. Before we get started, if you guys can hear me, just let me know in the comments. Say good morning, hello, let me know where you're tuning in from, all of that. Just so we can see, make sure everything is all set. You guys aren't having any issues. We'll gladly jump right into the program here today. I see a few people already chiming in. Good morning there, Jay, Richard, Steven, Dwayne, welcome. Hopefully you guys are doing well. Seeing a lot of people. Awesome. Okay, so everything looks like it's coming through. Looks like you guys are hearing me fine. You guys are having no issues. That's what I like to hear. So just before we get started, if you're new here, just tuning in for the first time, once again, welcome. Every single Thursday we go live here where we talk about, what's happening in the market today. Then we'll discuss a specific topic for the day, whether that be, a new feature, just tips and tricks, how to utilize certain things, how to analyze certain things, whatever it may be. We cover a variety of topics here every Thursday. And then as always, we save the fan favorite till the very end where we'll analyze any stock that you want to take a look at with the mobile app and show you how you can do so in less than 20 seconds. So, that's what you're looking for. Welcome. You're in the right spot. As always, since we have a lot of people in here today, if you haven't already hit that like button, make sure to hit that like button, hit that share button as well at the bottom of the video. And also, if you haven't already liked the VectorVest Facebook page, make sure to like that, turn on notifications. So every time we go live, you get updated, you get alerted, letting you know so you guys can join in and not miss out on these sessions. But, it is during the week, so if you do have to miss part of the session, you want to come back and rewatch it, that's fine. As always, all of our live videos can be found on our Facebook page under the live category, so you can always go back and take a look at those as well. If you ever need to review anything, or if you ever want to learn more, we have a lot of different topics already there, so make sure to check those out as well. Awesome. Seeing everybody saying hello. Let's see some VV high flyers. That is what we call our chat here, the high flyers here, because there's a lot of speculative traders that join in every week. We analyze a lot of speculative stocks. So let's see some VV high flyers or some hashtag high flyers in the chat there this morning as well. All right. So let's go ahead, jump right into it, get started here today. We've got a lot to cover. I've been doing a lot of research on today's topic to bring you guys something a little bit different. It is going to be a custom list of stocks, so I will take my time with that. So if you guys want to build this list yourself or follow along some of these stocks, I'll show you guys those as well. So with that, let's go ahead, take a look at what's going on here today. Then we'll jump right into the swing of things. So with that, as we can see right now, the color guard is 3 ticks into the yellow, the market is neutral, and VectorVest advocates caution when buying stocks at this time. So above me, you can see the VectorVest 7 real-time version. As you can see, the major indices are in the red, so therefore, with the caution light on, we'd simply be holding off from buying anything here today. But as we scroll down here a little bit, we get to the color guard, and the color guard analyzes the trends, the 3 of the components of our market timing system. As we can see, the first one we start off with is the price. Looking at the prices of VectorVest Composite. Now, if you're not already familiar with VectorVest, the VectorVest Composite is an arithmetic indexed average of about 8,300 stocks last time I checked. And we feel this gives us a better representation on what's actually happening in the market because it's looking at a wider variety of stocks in the overall market rather than just looking at, the Dow's 30 or the Nasdaq's 100 or the S&P's 500. Second indicator we get is the RT, standing for the relative timing. This is going to be the short-term price trend of a stock. So on a scaling of 0 to 2, above 1, the short-term trend would be up. Below 1, the short-term trend would be down. At 1.0 exactly right now, the short-term trend is simply neutral in the market. The next indicator is going to be the buy-to-sell ratio or BSR. Every single day, we give a buy, hold, or sell rating on every single stock that we track in the database. We utilize the ratio between the buys and the sells to get an idea on the overall health of the market. So the buy to sell ratio is above 1. That tells us there's more buy rated stocks than sell rated stocks, or that there's more stocks participating than not participating, and that would indicate overall market strength. Now, if the buy to sell ratio is below 1, that shows us that there's more sells than buys in the database, or overall market weakness. And then these 3 indicators are comprised to come up with the MTI, standing for the market timing indicator. This is going to be cast on a scale of 0 to 2 once again, and it's looking at the underlying trend of the market. As you can see, above 1 tells us that the underlying trend is currently up. However, we have seen it softening. We've been talking about that. We've gotten a little bit of a bounce over the last couple of days, but that seems to be dissipating once again, as we can see here today. Then we look at the trend column, where we show 2 parts of trend each and every day. First part is looking at the primary wave, or the weekly trend. As we can see, it's up since the price is higher on a week-to-week basis. And then the second part is just looking at the underlying trend of the MTI. Once again, above 1, so the underlying trend still remains up. But then for our most conservative subscribers, we follow the calls column. Stands for our confirmed calls. These are our last signals we get to get into the market, and our last signal we get to get out. Therefore, we never want to ignore a confirmed call change. And as you can see right now, we did get a confirmed down signal as of the 11th, so last Friday, and remain in that situation as of today. So with that, we know what's going on in the market. We scroll down a little bit. As always, we want to do our due diligence. If we were going to be looking with the caution light on, if we're going to be looking to buy, we want to look at the advanced declines. And we typically prefer a 2-to-1 bias in either direction. So if we were wanting to buy a stock long, we want to see the advances outpacing the decliners by at least 2-to-1. And just the inverse if the market's going down. So the market's going down, we're just shy of that 2-to-1 declines to advances bias. So therefore, we may hold off from the downside, may hold off from the long side, just simply managing our current holdings right now, and letting our stops do their jobs. So we scroll down, Dow is down only about 0.2%, NASDAQ coming back a little bit, down about 1%, S&P down about 0.5%, VectorVest Composite down a little over 0.5% as well. So with that, we see the major indices are lower. However, they have picked up off of the lows from pre-market this morning. If anybody wasn't, following that, the Dow, I think, was down about 300 points at the time. Now it's down only about 39. NASDAQ was down, I don't know the point numbers, but was down at least 2.5% pre-market this morning before the market opened. Now it's only down about a little less than 1%. So major indices have been picking up a little bit, and but overall still not enough to really tell us that we can feel comfortable with buying something right now. So once again, folks, if you're just tuning in, I see a lot of people just chiming in, just starting to get into the session here today, if you're getting into our live stream here today. So if you're brand new, make sure to hit that like button, make sure to hit that follow button and that share button. All that helps me out, continues to grow our group. So much appreciated. Don't forget to do that, please. All right. With that, we know what the market's doing. We know the market's pulling back. However, it's recovering a little bit, but still lower overall. So as you all know, or if you don't know, the Fed announced their decision to keep interest rates relatively low until at least 2023. So that means we've got a few more years of extremely low interest rates. Well, a lot of people don't realize that there's stocks in certain areas of the market that can benefit more than others. Some of them just being healthcare, dividend-paying stocks. We have commodities that do well, mid-cap stocks do well, healthcare, I think I've already said that one. But you have a few different areas of the market that really tend to benefit more than other areas in low interest rate environments. So today what I've done, I've got a few stocks here to go over, and we'll go into the watch list here and pull up our watch list. So consumer staples also being another one, pharmaceuticals being another one. So I built a watch list going through the program, looking for some of the top performers in their industries or in their sectors. So for consumer staples, I would go to it. And then for dividend pairs, I would go to that section. REITs, I would go to that section. And one of the key things that, when you read about it is companies that tend to benefit better in low interest rate environments are the stocks or companies that have a strong balance sheet. So low debt to income, stocks that don't have a huge deficit to them or have a consistency of being, or have a history of being able to pay off any loans that they get. Those types of stocks are the ones that tend to really thrive in a low interest rate environment. So I've come up with those, put them all together, or put a few of them together, not all of them. And these are some of the top performers or some of the safest stocks, for example, if you're looking for, consistency, if you're looking for solid fundamentals, RS is going to be the key here. So right now it is sorted by its default of VST. We can use this. It's a great place to start. Then we'll switch it up, take a look at the RS ratings, see which ones perform or see which ones have the better RSs. But once again, if you're copying these down, you can write these down. That's fine. This is a custom built watch list, so it's not something that's default into the program because it's specific for today's topic. There's no areas in it that would be for other areas that we see here. So with it, let's take a look. We got lows, and as always, the market has been pulling back. We are going to see some of these down a little bit, but surprisingly enough, they're actually holding in relatively well and still performing. So our top performer, Lowe's, it's been a top VST stock for quite some time. No reason or no wonder why it's there, because it's a stock that performs well in low interest rate environments. It has good fundamentals. They have a good balance sheet. Everything about that. If we take a look into it, we can see RV 1.55. So it tells us it has great long-term potential over the next 1 to 3 years. We look at RS, the consistency in their earnings and their fundamentals here. 1.44, pretty solid as well. Looking at the timing, 1.46 tells us it's still in a really strong upward trend right now. So overall, the stock's definitely favorable. Now, as we mentioned on the homepage, and especially if you're just getting started here with VectorVest, as always, the timing on the homepage trumps any individual ratings on a stock. So I may be showing some really good looking stocks here today, but regardless of that, if the timing is telling us do not buy, we would simply hold off from buying these, maybe keep these in a list. And so that way, when we do get that opportunity to buy, you can jump on board with them. But for right now, we're just taking a look, getting some ideas going, preparing for, when the market does bottom. So that way you guys can get better premium or better prices, get a bargain for some of these, take advantage of them when they've sold off a little bit. So you're not paying top dollar for some of these stocks, but could very easily help you out for more of a longer term investment style here. All right, let's go take a look. So we see Lowe's looks really good. We go back looking at their 1 year graph real quick. We'll just zoom in. There we go. All right, so I think I'm going to need a new cable here. All right, give me 1 second. There we go. All right, so looking at Lowe's, as we can see, nice steady rise from bottom left to upper right. You can see we do have a 50 and a 21-day simple moving average. That's from previous sessions. We can easily take that off, but then below that, we have the relative timing of the RT. Let's go ahead and change our graph real quick. So we'll go in and choose moving averages, take those off. There we go. And change the lower graph indicator to earnings per share, so EPS. There we go. And now we've got our graph as we want to see it. So 2 key things that we always want to look for is a steady rise in price from bottom left to upper right and a steadily rising earnings from bottom left to upper right. The reason why we look at earnings is because earnings is the engine that drives stock prices higher over time. So one thing you'll notice is VectorVest earnings is a little bit different than if you just went and looked at, Yahoo Finance and try to pull up their most recent earnings report. That's because VectorVest not only looks at the historical earnings, but also the forecasted earnings over the next 12 months. and we blend those two together to give an idea of, is this company making money now? And are they expected to continue to make money 12 months down the road? When you see this kind of graph and you see the earnings steadily rising like that, that tells us that not only is this company making money, but yes, they are expected to continue to make money 12 months down the road. So we go back out of here. Take a look at our next one. HZMP. There we go. So HZMP, you have a nice RV. So that tells us it has great long-term potential over the next 1 to 3 years. You look at the RS 1.30, tells us a really nice, consistent, fundamentally sound company, which is what you want. You want a solid fundamental company in low interest rate environments. Look at the timing, 1.39, a really nice strong uptrend. So overall, the stock's definitely favorable. Now, this may be a little bit different as well, because a lot of people over the last 6 months even have been only focusing on a handful of pharmaceuticals or biotech stocks, mainly due to the coronavirus. But there's been some good opportunities to capture better fundamental biotech companies or pharmaceutical companies that have consistency and not just getting caught up in the rumor, the news, the hype, the momentum there, if you will. So this is why, I wanted to do HZMP, because it's something that, a lot of people haven't been looking at, because it's been flying under the radar with all the talks on Moderna and those companies. So this is a great opportunity, flying under the radar. It's capturing the benefit of the rally in biotechs, but at the same time, it has better fundamentals than those companies, so it has the consistency to keep going up over time. I see Hang's asking about, let's see, the volume. Anybody else? I think volume's showing good on my side, so if you're having issues with volume, just try refreshing it there. But HZMP, it has, okay, awesome. So with HZNP, it has great fundamentals. It's a solid company. It's capturing the benefit of the rally that we've seen in biotech companies due to the coronavirus, and companies trying to come up with the vaccine with that. But at the same time, it has a better RS rating, which tells us that not only are the stocks, getting that benefit of capturing or rising with the overall sector or industry, but it also has the ability to continue to do so even once all this, news and hype starts to dissipate or starts to go away. This company has been around for a while. They have a consistency, a track record of their earnings, telling us that they can continue to move up even after all this vaccine hype starts to fade away. So good opportunity, especially over the next 2 years, 2 to 3 years with low interest rate environments. All right. Lawrence, I hear that a lot. It's almost too good. All right, so let's go take a look at the next one. IMMU, another one out of the biotechs. This one, a little bit more speculative, a little bit more for, you short-term aggressive traders, but one that could be adapted to long-term investors as well if it can get a little bit more consistency. So the RV at 0.01 tells us it has poor long-term potential over the next 1 to 3 years. Really, really nerve-wracking there when you see that. But then the RS is basically at 1, so it's about neutral when compared to its risk factor compared to all the other stocks out there. But this is a hot momentum play right now. Look at the RT at 2.0 tells us it's been blasting off like a rocket. So it's more of an aggressive trade, or a speculative trade that could have some good implications over the next 2 to 3 years. Whereas the Horizons, the one we just looked at, was more of a prudent one that had more fundamental focus to it. This one has more technical focus to it. I wanted to bring a mixture for you guys, so that way, we got a lot of different people in here. Everybody looks at different things. I wanted to give you guys a few different looks to know Just, make sure that we try to cover something that you could find useful here. Also, if you do find this useful and you haven't already hit that like button, do so right now. Hit that share button as well. All that helps me out, continues to grow our group, continues to grow our high flyers here. Looking at HCA. So HCA, you have good long-term potential. You have pretty solid fundamentals, really nice strong uptrends. So yeah, overall the stock's favorable. Now you may be asking, what if I'm not familiar with this? What is HCA? Well, tap on it, go to view report. And HCA is a healthcare stock. Healthcare services company engages in operating hospitals, freestanding surgery centers, emergency rooms, urgent care centers, all of that. So once again, stock advisory app comes in handy, being able to figure out what the stock is, what it does. Great for on the go, especially if you're not familiar with the stock before you ever get into it. So HCA Healthcare, another opportunity that benefits from low interest rate environments. Overall, the stock's definitely looking pretty good. Take a look at the next one, Sherwin Williams. So as we all know, a lot of home projects, consumer staples, obviously a big key winner here. Just like we saw at Lowe's, Sherwin Williams also getting a big push here as well. It's been a top VST stock for quite some time. You've had it in the top RS stocks for quite some time as well. We look at the fundamentals. The RV, not great, but definitely not bad. 1.05 tells us it does have some decent long-term potential. RS at 1.41 tells us really solid, consistent fundamentals and a track record of growing their earnings quarter over quarter, year over year for a long period of time. RT at 1.5 tells us, really nice, strong uptrend still. So yeah, overall the stock's definitely favorable. Get out, stop recommendation, or leave for rebound. So if you're looking for managing your stocks, definitely go back. We're not going to really get into money management here today too much, but we've done a lot of talks over the last few months or last month or so on how to protect profits, what to do or how to make money in a down market. We've covered a lot of that there. So I would definitely recommend, if you're looking for money management talk, definitely go back and check out some of those live streams. You'll get all the information you need on those. On the stimulus, I think they're all still good plays. So not necessarily. Lawrence, one of the things that this is focused on is not the stimulus at all, actually. This is more focused on just the environment that the economy is in, the low interest rate environment. So they're all going to be great plays, but it doesn't really, a lot of these aren't going to benefit whether or not the government does a stimulus. So these are just going to be some good opportunities to take advantage of over the next couple of years, for as long as the Fed, foresees low interest rates there. All right, so we've talked about that one. Another healthcare, THC. Good long-term potential. So this is a little bit more aggressive one compared to the ACH that we looked at. A little bit more aggressive. So RV 1.27, but RS at 0.74. So has good long-term potential, but does come with a little bit more risk associated with it. So we look at the timing though, 1.71, really strong uptrend. So yeah, the stock's definitely favorable still. Now we get into Realty Reits, those types of things. Dividend stocks are a great way to make money that can offset, or since, if low interest rates, you can't buy, you can't get a lot of return off of bonds. Dividend payers get a nice boost as well because they pay more than what, a bond would pay. And since it's the only game in town, you're going to see a nice return on your capital appreciation and capture a bonus every quarter, every month, every year, however they pay their dividends out there. Let's see. Yeah, Mike, we're going to be talking about, we got some ETFs in here for you as well. I know a lot of people like ETFs, so I've got some ETFs in here as well for you guys. Don't worry, I got you guys covered. I know I'm starting to get a feel for what you guys like, what you guys want to see. So I definitely have some ETFs for you guys, for all you ETF traders out there. All right, so here's our first ETF. Let's go ahead, view the report. That way everybody's familiar with it. So consumer goods, it's a leveraged ETF, UGE, but it pays a dividend, I believe. Let's go double check here. So we come down, dividend 42 cents a year, or 42 cents on an annualized basis. So this is our first ETF because it's looking at consumer goods, which are going to typically get a boost in low interest rate environments, plus it pays a dividend. So it's a great opportunity to take advantage of two areas that benefit a lot from low interest rate environments, all wrapped into one. So I thought this was a little bit of a unique situation and figured that this could be a good one to add to our list to keep an eye on at least. Give me 1 second here. Junior, sorry, bud, but yeah, that's going to have to go. Sorry about that, folks. As always, if anybody ever spams in here, they will get deleted out of the chat. So I do keep an eye on it. I don't necessarily am able to respond to every single comment that comes in, but I will keep an eye on it, and I will make sure that none of that kind of stuff happens here for you guys. All right. So, UGE, when looking at ETFs, the main focus, as always, is going to be the timing, because ETFs don't pay or don't have quarterly financial statements that they put out. So therefore, the RV, RS are always going to be at 1, and the RT is going to be the main focus here. So at 1.61, it tells us it's in a really nice, strong uptrend. Therefore, definitely still favorable currently. Why buy an ETF? Because, we talked about ETFs a lot last week. So if you want to go check that out, definitely recommend to do so. But ETFs can help diversify yourself, but also minimize your risk, because you're not necessarily stuck in one specific stock that can, have a big swing higher or a big swing lower. You're getting a basket of them. So therefore you have a nice steady rise, and you're getting the average of them rather than getting the best of the worst. So they help definitely diversify yourself and reduce your risk, and still keep exposure into certain areas without having to, figure out which one would be the best one to get into in that area. So it's definitely a great opportunity for a little bit slower of an approach. That's where, ETFs really shine for you. But this one, looking at consumer goods and paying a dividend, both of them have everything you need for success for the next couple of years as low interest rates continue. All right, so our next one here, Pharmaceutical, West Pharmaceuticals. So you have a decent long-term potential, 1.06, not great, but still not bad. But the safety factor, 1.47, really strong, consistent fundamentals. Tells us that, they have longevity here. They're consistently growing, and that's going to keep them continuing to move higher during these low interest rate environments, even after the whole vaccine hype starts to fade. So like this one, a little bit different. Definitely want to put that in here. Let's see. All right. Seems like we got a lot of spammers here this morning. Don't know. Maybe we're just catching on that much, folks. I don't know. So with WST, good fundamentals, steady, consistent uptrend. So yeah, overall the stock's definitely favorable. On YouTube, I'm not on YouTube, Hang. You said that we are in a downtrend. Should we wait for a pullback? Yeah. So Dan, as I stated earlier, especially if you're just tuning in, the overall timing of the market is telling us that we are at a top. We are seeing a bearish divergence. We haven't quite gotten to the oversold levels that we typically see. So therefore, we're very cautious, and just simply waiting. This is getting the juices flowing, if you will, getting some ideas going on what stocks that you can look at after the market pulls back that you can take advantage of. As always, market timing on the homepage trumps any individual ratings on a stock. So even if we find some really good stocks here today, we'd still simply hold off from buying them and wait for that buying or that better buying opportunity. So that way you can get, a better bargain for your money there. That's right, Alex. All right, so that's what we wanted to talk about with that one. Let's see. SLV. So getting into another ETF. So one of the things, as I was doing a lot of research on this before today's session, was talking about commodities. Low interest rate environments, just like we've seen with people getting fearful when the government or the Fed starts expanding or ballooning their budgets or their balance sheets. Commodities are a safe haven for people to go to. So we can see here with this one, silver being a commodity, definitely a good opportunity. No dividend or anything, but definitely wanted to cover commodities without having to get into the physical commodity, something that you guys can trade and add to your portfolio. Can VectorVest help buy options? Yeah, that's pretty much all I trade is options. Options are my bread and butter, if you will. ETFs, Lorena, stand for exchange traded funds. So it's like buying a basket of stocks rather than just buying individual stocks. So if you're new to ETFs, one of the easiest ways to describe it is, let's take the S&P 500, for example. Instead of going out and buying one single share of every single stock in the S&P 500, you could buy one share of an ETF that will be like buying a piece of all 500 stocks. So as the major index or the SPX goes up, that ETF would go up. It would match it almost 1-to-1. Sometimes it doesn't, but in theory, it'll match it 1-to-1 there. All right. So let's go ahead to the next one. UXI, another ETF. Let's go view the report. So this is looking at industrials. Let's see. Okay, so just industrials there. Scroll down. Nice steady uptrend. Looking at it, dividend 43 cents a share. So good dividends and an ETF on a good area. This has definitely some potential here. Then mid-cap stocks was one of the things that I saw consistently coming up. People were talking about mid-caps being a great opportunity here. And so I put in just one of the mid-cap ETFs. Obviously, there's a lot of them. This was just one of the best performers at the time. So this made the list. RFV, obviously you can do other ones if you're more comfortable with them. This is just one of the top RT ones currently at 1.27. And instead of picking out individual mid-cap companies, I decided to choose the ETF to capture that broad market move there. So the next one, SBAC, view the report. Communications and real estate investment. So REITs essentially. REITs benefit hugely from low interest rate environments. So this one, poor long-term potential, but really solid fundamentals. That's what you want to see. With any conservative stock, which a REIT would typically be under that category, you are going to see a lower RV typically and a higher RS. But you look at the timing, 1.08, not great, has been pulling back a little bit. Tells us that, we want to see it pick up a little bit more before we get back into it. But obviously with the timing right now, we'd simply be holding off anyways. And then biotech once again, ISRG, poor long-term potential, but really solid fundamentals. If you recall, or if you're just now tuning in, what we're looking for is low debt to income, really strong balance sheets, stocks that have, consistency in their balance sheets, growing their earnings, have good cash on hand. And that's what the RS is going to be telling us. That's why I picked this one, is because it has really solid fundamentals. Obviously, the trend at 1.06, not great, but therefore, right now is not the time to be buying anyways. Yeah, Dan. So, as I stated earlier, you're looking for the market to pull back. Right now, we've been talking about it over the last month or so that the market's been setting up for a sell-off. We saw a short breather over the last couple of days where the market's been moving higher and lower. But overall, we still are in a confirmed down situation. And we're waiting to see the market, really get to those oversold levels that we talked about a few weeks ago before we'd really start to jump on board or start to, really consider buying new positions or adding new positions to our portfolio. All right, so FIW. I believe this is one on let's see. ISE Water Index Fund. So this is going to be more towards real estate, I believe, or commodities, if I'm not mistaken. One of the two. But 1.17 stronger RT out of that industry there. So added it to the list. ODC, good long-term potential, a little bit more risk associated with it though. And uptrend is basically flat right now. So really the stock's neutral, but wait for the opportunity to get into it. GLD, bringing in another commodity ETF. Most people are familiar with this one. Looking at gold, looking at the timing, 1.10. That's good, but probably going to be waiting once again for that timing to pick back up. We take a look at the graph real quick. We can see price has been steadily moving lower. Most likely that relative timing has been moving lower as well. Would like to see that start to break out there. All right. GLD, and I believe that was our last one. One more. EQIX. So out of the real estate there, or REIT there. So poor long-term potential, but solid fundamentals. No surprise with 1.29 RS. Timing 1.03, telling us still not the best time to be jumping in, but therefore market timing is telling us that too. Hold it off, keep it on the radar, maybe not jump into it quite yet, but at least be ready for when that bottom comes in. Overall, the stock's favorable, but we really need to see that timing pick back up. So as we talked about, you guys have probably heard a lot, RS is key to finding those solid fundamental companies that you're looking for that can benefit even more than any other stocks out there. So one of the easiest ways to do, one of the benefits of VectorVest, just simply resorting it by RS, brings those top performers or those top fundamental stocks right to the top for us. So that way we don't have to go in and do that analysis on our own. Another option, now that we've gotten through these stocks, one other option I wanted to talk about is, as we've talked about dividend stocks, dividend payers. Well, if you have premium, which most people in here do have the premium list, if you have the premium list, you can come into the stock pick ideas and you have the retirement stocks. Here you have top dividend stocks, safest stocks, and overall top rated stocks. But top dividend stocks would really be where you want to look at. As you can see, the top 2 stocks and top 3 stocks actually come directly from our list here that we looked at earlier. And this is really what we want for people looking for dividend stocks to take advantage of. This is a great place to come. Obviously, wait for the timing to pick back up though. So with that, thank you guys for sticking around. I see a lot of people still tuning in. I know today's session was a little bit longer on the topic, but thank you guys for sticking around. Hopefully you guys learned something. If you did, please hit that like button. Please hit that share button. All that helps me continue to grow. The community tells me you guys are enjoying these sessions and keeps these sessions going. So if you haven't done so already, please consider doing so. With that, let's go ahead and jump into today's topic. And if you guys are new, or not today's topic, excuse me. Let's jump into the fan favorite of analyzing any stock that you want to take a look at in less than 20 seconds. Also, if you guys are new here and have questions on what we talked about, don't hesitate to give our support a call. Our support staff is hands down the best support staff I've ever seen, ever talked to, ever been part of. Because they don't just, want to get you the answer you're looking for, just get you a answer sometimes even, and get you out the phone. We want to sit down and talk to you and explain how things work to make sure that you didn't just get the answer, but you understand how or why that answer is the answer. So if you ever have questions, don't hesitate to give us a call, especially on today's topic. All right, so let's get into it. We got a couple coming in already. NEXT. So NEXT, poor long-term potential. Does have a lot of risk associated with it, but so that tells us it's a speculative stock. But timing at 1.98 tells us strong momentum. It's up another 11.5% today. Looks like it's, a great either short-term swing trade or day trade stock. But aside from that, for a long-term holding, definitely going to have to pass on that one. Evoke Pharma. There you go. So poor long-term potential, does have a little bit more risk than the average stock out there, but you have a really a nice, steady, consistent uptrend still. Not enough, though, to make this stock favorable. Let's see, XLU. All right, so XLU ETF, therefore, the main focus is going to be the timing. At 1.07, that tells us it is in an uptrend, but not a strong enough uptrend that we would want to jump on board there. Apps. There we go. Great long-term potential, solid fundamentals, really, really nice, strong uptrend. So, yeah, the stock's definitely favorable. SPAQ, poor long-term potential, a lot of risk associated with it, but strong momentum. So if you're a short-term trader, a swing trader, day trader, this could be a good opportunity for you. But if you're a longer-term investor, this is going to be one you have to pass on for now. Let's see, TUP, poor long-term potential. A lot of risk associated with it, but really nice, strong uptrend. So overall, the stock's favorable right now. BA. Let's see. All right, looking at BA. Poor long-term potential. A lot of risk associated with it now. It's in a steady decline. Overall, the stock's not favorable. Man, it's crazy to see how after just 1 year, what that can do to a stock if they can't get their act together and can't get things corrected. Anybody else just get amazed by that sometimes? That, Boeing, big name like that, had some issues, said they were going to get over it, and they're still dealing with the consequences to this day. All right, looking at AMAT, good long-term potential, solid fundamentals. However, right now it's just not the time to be in it. So, therefore, the stock's favorable fundamental wise, but not from a technical basis. MCHP, good long-term potential. A little bit more risk associated with it, though. You have a slight downtrend. So, overall, the stock's about average, a little bit above average, but really need to see that timing pick up. RKT. All right, RKT, good long-term potential, does have a lot of risk associated with it though. Timing, slight downtrend, not by much, but still definitely cause for concern. Therefore, the stock's not favorable right now. WKHS. So, workhorse, poor long-term potential, a lot of risk associated with it, but it's a hot momentum play for you traders out there. Therefore, the stock's favorable. Let's see. Zalta holding Apple and Facebook, staying right. Nobody can tell you what to do with those except for you. There's a lot more than just saying stay into them, right? Than that to answer that question. You got to know when you got into them. If your cost basis on Apple is $40 a share, or even less than that, maybe $20 a share, yeah, you're probably going to stay into it because you have that long-term gain build up. There's just so many other aspects that go into it that you would have to come up, or that, really go into it just being able to, or to say yes or no. All right, so let's get back into it. Where are we? PKTX. Did I get that right? PKTX. Not finding that one there. CMCSA. Comcast. Poor long-term potential. Solid fundamentals, though. Steady, consistent uptrend. Overall, stock's favorable. Let's see. NKLA. All right. So poor long-term potential. A lot of risk associated with it. It's been in a steady free fall. Overall, the stock's definitely not favorable there. Let's see. INTC. INTC, good long-term potential, less risk associated with it. However, timing just not quite there. So holding off for right now, just waiting for that timing to pick back up. RAGI. All right, RAGI, good long-term potential, less risk associated with it. You have a nice steady uptrend, a really strong uptrend. So yeah, the stock's definitely favorable still. SHOP, SHOP. Poor long-term potential, but pretty solid fundamentals. However, timing is just not right on this stock right now. Therefore, the stock's not favorable currently. LHX. So, good long-term potential, solid fundamentals, nice steady uptrend, consistent uptrend. Overall, the stock's favorable. KT or KNTNF. KNTNF. Oh, there we go. So good long-term potential, about average risk associated with this stock. Really hot momentum play. Overall, stock's definitely favorable. COOP, COOP. Poor long-term potential, a little bit more risk associated with it. You have a really strong momentum play, though, currently, so it's more of a speculative trade. So, therefore, it's favorable only for the speculative traders, though. Let's see. WORK, WORK. So, poor long-term potential, a lot more risk associated with it than the average stock out there. It's in a steady decline. Therefore, the stock is not favorable currently. DTGI. DTGI, man, that's a tongue twister. Poor long-term potential. You got a little bit more risk associated with it. It's in a slight uptrend, but not enough to make the stock favorable currently. BIGC. See, BIGC, poor long-term potential, a lot of risk associated with it. It's in a steady decline. Therefore, the stock is definitely not favorable. SNOW. SNOW. So a speculative trade, poor long-term potential, a lot of risk associated with it. It's in a steady uptrend. Overall, the stock though is still not favorable. I believe this was a IPO just yesterday. So yeah, there's a lot of risk in IPOs. They don't have a proven track record on the public markets. Maybe in private equity markets they do, but not in public markets. It's why we're going to see the low RV and RS scores, because right now you're speculating on what it's going to do going forward. ABUS. We'll do a couple more here after this one. So ABUS, poor long-term potential, a lot of risk associated with it. It's in a steady decline. Therefore, the stock's definitely not favorable here. We'll do one more, VZ. So looking at Verizon, poor long-term potential, about average risk associated with it. You're in a slight uptrend. Overall, the stock's about average. Nothing really to write home about currently. So on that note, let's go ahead and take a look at the homepage. If I didn't get to analyze your stocks, I do apologize. There's a lot of stocks coming in. But on a positive note, if you already are a subscriber, all you got to do is pull up the app wherever you are, tap on the magnifying glass in the upper right, type in your symbol, and you can do the same kind of analysis on your own. Now, if you're not already a subscriber, there is a link in the description of this video. Click on that. You can subscribe right away, get started with it, put it to use, put it to practice. If you have questions, give our support a call. We do offer free coaching to all new subscribers and even long-term subscribers that have been with us for a while that just need a refresher. But we want to give you coaching to help you not only get started on the right track with solid investing principles or solid investing tips and But we also want to make sure that you understand how the indicators and how VectorVest works, because if you're new to investing or new to VectorVest, you could see, some things and maybe skip over some things that are really important. So we want to make sure everybody that does start with VectorVest or uses VectorVest gets the coaching and education that they deserve to make them, the best investors or traders that they could possibly be. So with that, taking a look at the market, we're still 3 ticks into the yellow, 3 yellow lights across the board. MTI picking up a little bit. Looking at the advanced declines, a little bit better on the advances. Declines pulling back a little bit, but still nothing close to where we want to see them at. Major indices still down. Dow's down about 0.1%, picking up a little bit. Nasdaq's starting to pull back a little bit more now, down about 1.2%. S&P pulling back a little bit, down about 0.7%. Overall, VectorVest Composite really hasn't moved too much, still down a little over 0.5%. So, on that note, it's been my pleasure being with you guys here today. Thank you all for tuning in. I love doing these sessions, love getting to interact with you guys, helping you guys out. My goal here is to help you become become financially independent. So, every week we go live, we talk about different topics to help you become more successful investors. So if you've enjoyed today's topic, don't forget to hit that like button, hit that share button if you haven't already done so. And if you haven't gone to the Facebook page, turn on notifications, like the page. That way you guys get updated whenever we go live there. So on that note, take care. Have a great rest of your trading day. Be safe this weekend, and make sure to tune in next Thursday at 11 a.m. Eastern as we kick off another one of our sessions. Bye for now, everybody. Have a great rest of your day.